Hello, everyone. My name is Kenton Covestiu. I'm an ex-BCG consultant, ex-Googler, and the founder of Rocketblocks, an online platform that helps candidates prepare for interviews. In today's Rocketblocks video, we've got an awesome mock case interview featuring two of our Rocketblocks experts. Yatharth Sharma is a graduate of the Booth School of Business and a BCG consultant, and Daniela Fernandez is a graduate of the Darden School of Business and an incoming BCG consultant. The case that they're working through is a fun case as well. It's about one snack food company, a peanut company, thinking about acquiring another snack food company focused on the almond space. There's a lot of fun market sizing, profitability aspects to this case. So let's go ahead and jump in.
Hey, Daniela. Thanks for taking out the time. And for the folks listening in, my name is Yatharth, and I am a consultant at BCG Chicago.
Hi, everyone. I am Daniela. I am at Darden MBA, and I'm an incoming consultant at BCG.
Awesome. Thanks for taking out the time, Daniela. Super excited to run this case with you. So if you're ready, here's your prompt.
Yes, let's do it. Thank you.
Awesome. So our client is Peanut Co., a US snack foods company specializing in snacking peanuts. They're planning to acquire another company specializing in snacking almonds, and that target company is called Almond Co. Peanut Co. is currently the market leader in snacking peanuts, but the overall segment is growing slowly compared to the market, and they want to diversify. And so they've hired us to tell them whether this is a good idea.
All right. This seems like a very interesting case. I'm a big snacker, so I'm excited to jump into this.
Nice.
Just to make sure I got it correctly, our client is Peanut Co. They're a leader in peanuts, but they see slow growth, so they came to us to see if they should purchase Almond Co. to diversify. Is that correct?
Yep.
Awesome. So I would just love to ask you a few questions, if that's okay. The first one is, what's their business model? Are they vertically integrated? Are they playing in other segments other than peanuts?
That's a great question. So they are focused only on peanuts, and they manage the retail and distribution and manufacturing side. So the supply side is mostly commoditized, so that's pretty standard. But for the purposes of this case, our client is heavy on manufacturing, distribution, and retail.
All right, that makes sense. The second question is, this slow growth trend that you talked about, is it affecting the entire snacking industry, or is it just peanuts?
We are actually just seeing this on peanuts. So that's why Peanut Co. would like to try out a different area of the snacking industry.
Interesting. And well, I guess it makes sense because almonds are like superfoods and they must be growing. The next one is about the objective. So what exactly are they looking at? Do they want profits, sales, or just keep growing?
Yeah, good question. So they primarily want to diversify simply because they're very concentrated in peanuts. But any other reasons why this may or may not be a good idea, they trust our advice. So please feel free to suggest any other metrics that might be fitting in this analysis.
Okay, that's good. And the last one, just to clarify, we're talking about US only, right?
Yep, we're talking about the US markets only.
Okay, perfect. I would love to take a couple minutes just to put my ideas in order and then come back to you, if that's okay.
Yeah, sure. Go ahead.
All right, so in order to recommend if they should acquire Almond Co. or not, I think I would look into 4 different things. The first one is the almond market. The second one would be Almond Co.'s profitability. The third one, synergies. And lastly, what's the acquisition terms? So in terms of the market, first I would like to look at the size and trends of the almond market. Who are the competitors and what are their share of market, and also what's Almond Co.'s share of market? What are the supplier dynamics? You said it's commoditized, but I would like to know what's their power and just what are the power of all the suppliers. And finally, what's the regulations? I know nuts are big allergens, so how easy is it to start buying or selling almonds? Moving into Almond Co.'s profitability, I would love to know what's their pricing. I know right now there's many different tiers. So there's like super premium almonds or super basic almonds. Where are we playing? what's our costs, our margins, and also how do their operations look like?
Mhm.
Are they as vertically integrated as we are, or just distribution? Then wrapping up Almond Co. and then moving to the synergies that we could achieve together, I would like to know how can we leverage both companies' capabilities? If there's going to be any cannibalization, I think that's important. And what are the opportunities for portfolio expansion? When you said that we sell peanuts and we want to acquire almonds, I thought like maybe they could do a trail mix or something like that.
Mhm.
And finally, moving to the acquisition terms, what's the price of acquiring Almond Co? What would be the payback period? I think that'd be interesting to look at, and just the general financial deal, and if we have the money to buy it.
Mhm.
So, wrapping up the acquisition terms, I would love to start with the almond market. So, do you have any information about the size of the almond market?
Yeah, that's a great question. So I think there is some analysis we probably need to do to understand what is the market size of the almond market. So where would you like to get started?
Okay, so to size the almond market, I think first I would start thinking of the US consumers of almonds. Then I would multiply that times the packets or boxes that they consume per week and then per year. And finally, what's the packet price, the average packet price? When I'm thinking of the consumers of almonds, I imagine that there will be very heavy users and very light users. So I guess there will be like different amounts of packets that each of these tiers consume.
Mm-hmm.
So if that sounds right, I can start putting numbers into that.
Yeah,
So
that's a good approach. Yeah,
perfect. So the US population, I know we are a little bit over 300 million, so I will round it to 300 million.
that's all right.
And then for the packets, I don't think I know what's the average size of an almond packet. So do you have any information about the size and maybe the price?
Yeah, absolutely. So we know that Almond Co's packet size is 16 ounces per packet.
Okay,
And they sell it at a selling price of $2 per packet.
awesome. Okay, that's super helpful. Okay, so if I had to put numbers into the percentage of the US population that doesn't consume snacks, just in general almonds, I think 75% don't consume almonds.
Yeah,
If that
about
makes
three-fourths of the population just does not consume almonds. Yep,
awesome.
that's
Okay.
reasonable. Yep.
And that would make 1/4 of the population consuming almonds. And from this 25%, I would say maybe 10% are light consumers, maybe another 10% are moderate. And I know there's people who really consume a lot of almonds. My boyfriend is one of them. So I think that it's 5% of the population who are very heavy into that.
Yeah, I think that's a reasonable, that's a very reasonable way of essentially segmenting the market. So yeah, for more clarity, what sort of consumption are you thinking in each of these categories?
Yeah, I would like to define that too. So I think casual consumers could maybe consume 2 packets per month. So if it's
Yeah,
16 ounces, I am thinking that maybe, yeah, in a week they would eat half of it
yeah, yeah,
very lightly. So I
yeah.
think that
Makes
that's
sense.
conservative. Then
Mhm.
moderate consumers, maybe 1 packet per week. So that would be like 60 packets per year. Um,
Yeah.
and then for the very frequent consumers, so I think I'm even thinking 10 packets per month,
Hmm.
just taking the benchmark that I know. I think he eats, yeah, probably like 2 packets per week. So
Yeah, yeah, that makes sense. That makes
all
sense.
right. So that'd be 120 packets per year for frequent consumers. So just to summarize, 10% casual consumers, 10% moderate, 10% frequent. The casual consume 25 packets per year, moderate 60 packets per year, infrequent 120 packets per year.
Mhm.
Okay, so now I will take what percentage of the population would be the total number of people who actually purchase these packets.
Mhm.
So 10% of the 300 million would be 30 million,
Mhm.
and 5% would be 15 million.
All
So
right.
if I multiply these times the packets that I said that they consume per year, it would be for the casual consumers, 30 million times 25. That would be 750 million packets per year.
All right.
Okay, for the moderate consumers, 30 million people consuming 60 packets per year. That would give me 1,800 million packets per year.
All right.
And finally, for the very frequent consumers, I would multiply the 15 million people consuming 120 packets per year. That would give me, again, 1,800 packets per year. Okay, so if I add up all these packets, it is 4.5 billion packets. Can I round that up to 5 billion packets just to simplify?
Yeah. Let's consider there might be certain outliers from the three-fourths of the population that does not consume. So yeah, makes sense.
Yeah.
Let's round it up to 5 billion.
Okay, sounds good. So if I multiply that times the $2 per packet that you mentioned, the total market size will be of $10 billion per year.
Mm-hmm.
So I think this can sound attractive. Obviously, I would love to test some of these numbers further. But the potential Almond Co. won't have 100% of this market share. So I would like to know what's their market share if you have any information about that.
Yeah, we know that Almond Co's market share is 10% as of today.
Okay. So 10% of the 10 billion, that means that their annual revenues is 1 billion. So this sounds good. And in order to get a metric like a payback period, I would love to know what's their margin. So do we have any information about their profitability?
Yeah, they are at a profit margin of 50%, 50%.
50. Okay. So 50% of the 1 billion is 500 million, and that's their annual profits. So are we considering any annual growth rate of this share of market?
That's a great question. For this analysis, let's assume constant growth instead of like any, sorry, let me rephrase. Let's assume constant market size instead of any growth rate.
Okay, so they keep their 10% year after year, right?
Yes.
Okay, that makes sense. All right, so I think the only thing that I missed right now to get the payback period, it was the purchase price. Do we have any information about that?
Yeah. So the purchase price that is being asked is $1.5 billion.
Perfect. Okay, so now I have everything that I need. So to get the payback period, I will divide 1.5 billion over the 500 million that we got from margin. So if I do that division, it gives me 3. So the payback period is 3 years. I think this seems like a very reasonable time to get the investment back. I just think that there's many risks and opportunities that we still have to consider.
Okay, that makes sense. Before we talk about further opportunities or risks, I think along the same lines, you mentioned certain assumptions that you wanted to understand a little bit further a moment ago. So what are the assumptions that you're most uncomfortable with, and which ones would you like to test further?
Yeah, I think first, the purchase price. I just would like to check how they got to the 1.5 billion, what's their valuation, what methods did they use. And also I know we did it for simplifying it, but having a constant share of market year after year seems a little bit unrealistic, and more knowing that the snacking market is growing so fast. So I would like to test that.
Awesome. And that actually helps us go into the next part of this interview, which we want to understand, in which we want to understand what else would you want to consider given Peanut Co.'s existing snack nuts business?
Okay, so I think I would like to consider two things, and I am thinking of the positives and the negatives, so benefits and maybe risks.
Mm-hmm.
For the benefits, I think that we can really take advantage of this from a client perspective and sales perspective. We have our current clients, and also we will get almond co's. Also, I think they could explore new businesses like restaurants or more industrial clients. Also, I'm thinking of distribution and packaging. So there's a lot of cost reduction opportunities, which can be attractive.
Mm-hmm.
And finally, innovation. Now that we have both, what if we explore new flavors? What if we do a trail mix? We can also do bigger formats, smaller formats, even start doing flour and peanut butter and almond butter, etc.
Yeah.
So that's for the benefits. And for the risk part, I think so you mentioned that we are market leaders in peanuts, and it seems like Almond Co. only has 10%. So is this going to affect our brand perception? And also, is there any cannibalization? At the end of the day, it's the same consuming opportunity, right? To have one snack or the other. So will consumers start choosing one over the other? Yeah, I think those are the main benefits and risks that I can think of.
Awesome, awesome. So with all of that, now we'll be walking into the room with the CEO. So what would be your recommendation to the CEO of Peanut Co.?
All right, so my recommendation is let's go for it and acquire Almond Co. Because the payback period is 3 years, which seems very reasonable. Also, we have the right to win in this segment because we're already playing in snacks, in peanuts, it's very adjacent segment. And there's a lot of potential synergies in operations, sales, cost reductions. The risk that I am thinking of is cannibalization, our current sales. And also, there may be a potential brand dilution. But to mitigate this, my next steps recommendation would be to design a very robust marketing strategy to evaluate other snacking segments. Maybe it's not almonds and maybe it's something else. And finally, just check the purchase price that they're proposing because we may get a better deal.
Right. Yeah, that makes a ton of sense. So thank you so much for this analysis, Daniela. It was a pleasure working with you. Cheers.
Thank you, Yatharth.
Hey everyone, it's Kenton Cavesti here, the founder of Rocket Blocks. Thank you so much for watching this mock interview video. I hope you found it informative and helpful as you are getting ready to prepare for your own interviews and hopefully landing that job offer you are excited about. We have a ton of great content on the Rocket Blocks channel coming out on a weekly basis, mock interviews, mini lessons, and chats with our Rocket Blocks experts. So if you haven't subscribed yet already, please do so. There is a big red button below. And if you hit that, you'll get all of our content as soon as it comes out. Thanks for watching and have a great day.